Hey everyone, welcome to the channel and welcome to another video. So first of all, I apologize for the bad lighting. I am filming this video in the evening here in Panama and I don't have my usual equipment, my lighting equipment. So I apologize for that. So as an income investor, I'm always on the lookout for new funds that are really designed to provide investors with a consistent source of income. And four pillars of my investing strategy is really diversification, quality companies or blue chip companies, covered calls, and leverage. But it's really rare to find all four of those pillars in one fund, right? So with the Harvest Diversified Monthly Income ETF, you do. Stock symbol HDIF or HDIF. So obviously this is the type of fund, the type of ETF that gets my attention right away. So in this video, I'll do a deep dive into this fund, this new fund from Harvest. So we will not only look at what kind of stocks and companies are in this fund, but also look at the distribution policy, the management fees. And then at the end of the video, I'll give you my verdict on this ETF. Should you invest in it? How much you should allocate to it? So let's get to it right away. All right, everyone, let's check out HDIF in detail. So as usual, we always go on the fund's website to know the details of the fund. So here's the stock symbol HDIF, the Harvest Diversified Monthly Income ETF, reliable income, diverse growth opportunity. So if we scroll down, we'll see the key facts here. So the stock symbol is HDIF. Keep in mind, this is a TSX listed fund. It's a ETF listed on the Canadian stock market. So the currency is in Canadian. And you see here that it holds 5 ETFs, which we will check in detail in a second. The target yield is 8.5%. That's what it started with. Obviously, the management style is active with covered calls. So this is an all-in-one covered call solution. Here is the monthly distribution. So 7.08 cents a month, which is pretty much 85 cents a year. So that is the annual dividend rate per share, and the distribution is monthly. So we are getting monthly income here, and they gave a risk rating of medium on this fund. So let's check it out in detail here. So like it says here, it offers a portfolio of 5 equally weighted Harvest ETFs positioned to deliver steady monthly income. So the multi-sector portfolio is comprised of large global companies, so blue chip companies diversified across key sectors: healthcare, global brands, technology, utilities, and US banks. So what is this ETF designed for? Well, it's to provide a consistent monthly income stream with an opportunity for growth. So whenever you see the income before the growth, it means it's income oriented. So the portfolio is reconstituted and rebalanced at a minimum quarterly. So because it's equal weighted, there's, if the bank's ETF, for example, does really, really well, it's going to become bigger and bigger. So they basically rebalance it every quarter here. And to generate an enhanced monthly distribution yield, an active covered call strategy is applied on up to 33% of the securities held inside the portfolio. So as we know, I've covered it, the covered call strategy of Harvest in an earlier video. They do not write, the maximum they write covered calls on the portfolio is 33%. So that's the maximum. So the rest has no covered calls, and it participates in the growth. So the benefits of HDIF: it's a one-stop diversified core monthly income solution, large cap companies across multiple sectors, powerful long-term growth, consistent income 8.5%, and modest leverage of 1.25. So we're talking about 25% leverage, very, very modest here, to enhance the income. And of course, the covered call strategy enhances the income potential and lowers volatility, right? That's just, covered calls is a very defensive strategy. It protects our income even during flat and down markets. And here's a really good fact here: zero management fee on top. So the 5 ETFs, which we're going to look in detail, they each have management fees. So HDIF does not have a extra management fee on top of that. So you have some more details which we already covered. So if we just open the brochure, which is this link right here, we'll get this nice brochure here that shows us the 5 ETFs in detail. So you have within HDIF, on an equal weighted basis, so 20% each, the HTA ETF. Of course, these are all Harvest ETFs, which focuses on technology. HHL healthcare, HBF, the best global brands, HUTL utilities, and of course HUBL, the US banks. So here it just explains basically. You could go ahead and read this. I won't go through it completely, but the importance of income, right? I mean, income focused investing, I think, in my opinion, is getting more and more popular because, especially for retirees and people who are about to retire, we absolutely need income. To beat inflation as well, which is going up. So very, very important to get a lot of income as much as we can. And 8.5% yield is definitely really, really nice income here. So here you have the 5 ETFs. You have the HHL, which is healthcare. So like it says, growth driven by aging developed world, richer developed world, and consistent innovation with the healthcare companies. Broad diversification across healthcare subsectors. So we'll see these 5 ETFs in detail. So it's not just pharmaceuticals. Basically, it's all companies related to healthcare. Track record of consistent growth and high yield. That's what the healthcare companies do. HTA, the technology one. So growth leaders for a decade, architects of the future. So technology, very, you can't argue with this. Very, very important companies. It's shaping our future. Technology shapes our lives, like it says here, continues to drive growth and innovation, and sector where size and scale of companies is increasingly important. So those companies are getting bigger and bigger and bigger. We're talking about Amazon, Microsoft, Google, Facebook, etc. HBF, you have the brands that have reputations of resilience. So you own some of the biggest companies in the world, dominant players in growing market share, resilience that only global brands can provide. These, you will see them in a minute, but companies that have the best marketing teams, basically the best marketing efforts. HUBL, so this is the titans of finance at the heart of American economy. So we're talking about the biggest US banks here. 16 American banking giants, okay? No small fries, no small cap, no medium cap companies here. Broad diversification. We'll see that in a second. And of course, HUTL, last but definitely not least, very defensive, just like HHL, which is utilities and telecom. So a traditional defensive asset class for income seekers. I like it, and I like it even more. Diversification across subsector and geography, which is really cool. It's not US focused, HUTL, but it's worldwide focused, and it focuses only on large caps. So let's go through quickly the ETFs one by one. So we'll focus right now on HHL, which is one of the 5, right? And this focuses on healthcare, of course. And if we, I just want to bring your attention to the company. So these are the biggest and best healthcare companies in the world, guys. There's no small fries here. You'll recognize most of them. If you go to the pharmacy, these are the companies that have the stuff on the shelves. AbbVie, Bristol Myers, AstraZeneca, Anthem, Eli Lilly, Stryker, Boston Scientific Corporation. You might recognize some, you might not recognize other. You even have the details here on what kind of healthcare company they are. Is it a pharmaceutical? Is it a healthcare provider and services like United Health Group? Is it biotech, pharmaceutical? Once again, Zoetis, Abbott Laboratories. This is more healthcare and equipment and supply. So it's not just pharmaceuticals. There's also healthcare equipment and supply companies. Johnson and Johnson, Merck, Thermo Fisher, Pfizer, of course, is a big one. So very, very diverse in terms of subsectors. So that's what we saw earlier, right? It said subsector diversification. So you have pharmaceuticals, healthcare equipment, biotech, healthcare providers and services. So it's very, very spread out in terms of the healthcare universe. Then you have the brand leaders, the best companies in the world in terms of brand power. So if we look at the types of companies in here, you will recognize all of them because their job as marketing, that's why they're the best brands in the world, because they're really, really good at advertising and marketing. Very, very powerful companies. You should recognize all of them, all 20 of them here. Walt Disney, UPS, Verizon, Visa, Alphabet, which is Google's parent company, Apple, Shell, United Health Group, Intel, McDonald's, Microsoft, Procter & Gamble, which make a slew of consumer staple companies, consumer staple goods, I mean. Bank of America, Johnson & Johnson, Pepsi is here, Nike is here. So really companies that have powerful, powerful brands. And we're talking about very, very good diversification across multiple sectors. Information technology, so the tech sector, communication services, financials, healthcare, etc., etc., etc. Then, of course, you have HTA, which is the Tech Achievers Growth and Income ETF. So, of course, should be no surprise to you. These are the best, biggest tech companies out there. So not only, IT services and software companies, but also chip makers. So you have AMD, Nvidia. Those are two chip makers, Broadcom as well. Then, of course, you have Google, Visa, Apple, Qualcomm, Cisco, Microsoft. So a little bit of overlap with the brand leaders here, but even more condensed and even more of the technology companies. Salesforce, Accenture, Oracle, Adobe, that's software, another chip maker, Intel. Right, Intuit, they make software for accounting. Of course, Facebook is here. So all the best technology companies. Then, of course, one of my favorites is the equal weight, global utilities income ETF. So equal weight, just that means that within the fund, which is 30 companies in this one, it's equally weighted. So if we go down, we will see all the companies here. You'll recognize some of them. You might not recognize all of them because there's a lot of European companies in here, which is really, really good. You get really good diversification, but you'll definitely recognize, the Canadian ones, some American ones like Bell, Kinder Morgan, which is pipelines in the US, Edison, which is electricity company in the US, First Energy as well. TC Energy, of course, we know what that is, pipeline company in Canada. Emera, there's a big one in Canada as well, electricity. There's a bunch of, here's TELUS, Verizon is here. And you have a bunch of other ones that are really the best, biggest telecommunication or phone providers in Europe. So you have Swisscom AG in Switzerland. You have this one here in Spain. You have Deutsche Telekom in Germany, Telenor ASA in Norway, Sweden, Vodafone in the UK. You have one in Finland. So amazing geographical diversification here, which you could clearly see here. So in subsector, this is utilities, which means you'll get electricity, you'll get telecom, you'll get pipeline companies. So you see that nice diversification. And the geographic diversification really is what makes this ETF special, in my opinion. Of course, very focused on United States and Canada, but you have the UK, Spain, Germany, France, Netherlands, etc., etc. So the best utilities and telecom and pipeline companies, not only in North America, all over the world. Last but not least, the Harvest US Bank Leaders Income ETF. So in here, like we saw earlier, you have 16 of the most powerful US financial companies in the US. So we're talking about Goldman Sachs, not just straight up banks, but also companies that are financial titans. That's why it says capital markets next to Goldman Sachs. So you might recognize some. I definitely recognize Bank of America, Wells Fargo, US Bancorp, Citigroup, JP Morgan, and Chase Morgan Stanley. So these are really the top of the top, really the big blue chip banks. So in Canada, you would compare them to Royal Bank of Canada, TD, Scotiabank, National Bank, CIBC, and BMO. So that's basically the equivalent. So here, these are basically the 5 ETFs in detail that make up HDIF, right? So HDIF, it's exactly those 5 ETFs that we saw on an equal weighted basis, so 20% each. The reason why you see a little bit more is because of the leverage here. So it basically, these are the 5 ETFs included in HDIF, so it's a great one-stop shop for a big chunk in US exposure. So there you have it, everyone. HDIF, an awesome all-in-one covered call solution from Harvest. So now that you know what it holds and how it works, it's time for my verdict. So it should be no surprise to you that I really love this new fund. Like I said at the beginning, it has really the 4 pillars of my investing strategy: diversification, quality, covered calls, and leverage, all in one fund. This is the type of ETF that's really a dream come true for me and for income-oriented investors. It's actually very similar to the Hamilton ETFs, right? The Hamilton all-in-one covered call ETFs, HDIV and H Yield. Heck, in both of those ETFs, 2 of the 7 funds within them are the Harvest funds, right? HHL and the brands one in H Yield, and HHL, which is the healthcare one, and the tech one in HDIV. So one clear advantage, however, that HDIF does have, which we cannot deny, is that there is no additional management fee on top of the underlying fund. So this is, of course, because the underlying ETFs, the 5 ETFs which we saw, are all Harvest products. So there's no extra management fee to pay on top of that. Also, HDIF, right, like we saw, is very US focused. It's pretty much like 90% US companies. So it's a great way for us Canadians, who are typically a little bit heavier invested in Canadian companies, to get really solid blue chip stocks that focus in the US. So a very common mistake that newer Canadian investors make is that they focus too much on the Canadian companies, like the big banks, the telecom, utility companies, energy companies, etc. Remember that the best blue chips in the world mostly come from the US, and a lot of these companies have international operations. So another thing that I like about HDIF is that it's pretty much 40% plus defensive exposure. So since it's equal weighted, right, between the 5 ETFs, HHL, which is healthcare, HUTL, which is utilities and telecom, are defensive sectors. So 2 out of the 5 are defensive. So that's your 40%. And I say plus because there's also the brands one, and in there's a lot of very defensive companies like consumer staples, like Pepsi and McDonald's, and a lot of the best brands in the world that are typically very safe and stable companies. So very, very defensive fund. So the $1 million question: how much should you allocate to this ETF in your portfolio? Should you sell your individual harvest ETFs like HHL or HUTL to swap them into this new fund, into this all-in-one covered call ETF? So I've been getting a lot of questions for that lately. Well, don't worry, because I already made a video last week that talks about that question and the 6 factors that you should consider before swapping your individual covered call ETFs for these all-in-one solutions. So make sure to check out that video. Also, what about myself? How much did I invest in HDIF? Did I swap any of my individual covered call ETFs for HDIF? So all will be revealed in the next portfolio update video, which will be on March 27th at the end of the month. It's a pretty big update, a lot of changes, so you guys do not want to miss it. So like I said, March 27th, mark the date. So what do you guys think about HDIF? Don't be shy. Let me know in the comment section below. Thanks for watching, everyone. I really appreciate it. Please show your appreciation by hitting the like button. Hit that thumbs up button. It's free for you. It takes 2 seconds and it helps the channel grow. So it's a win-win. Also, if you like this type of content, this channel is all about investing for passive income. There's stock picks. I got a lot of great content coming up. I'm always thinking of new content. So make sure you're subscribed and hit that little bell button next to the subscribe button so you're notified every time a new video comes out. You don't want to miss my new content. We also have a website. Make sure to check it out, passiveincomeinvesting.ca. That's where you could purchase my digital product, the ultimate DIY investing package, which is on version 3 right now. I'm very proud of this product. It's a companion tool, a reference tool to really help you build your own portfolio, whether you're a Canadian investor or an American investor. There's sample portfolios in there according to different investing styles, not just income, what I do, but there's also some growth and dividend themed sample portfolios in there. And it comes with lifetime updates, so you only need to purchase it once. So make sure to check out my website for all the details on this product. There's also a video there where I show from A to Z what this product is, so make sure to check it out. Also on my website, I offer right there on the homepage a one-on-one consultation service with yours truly, me personally. It's a 1-hour Zoom meeting face-to-face in case you want more personalized help, where I go over your situation, help you build a portfolio according to your own needs, answer all your questions, help you transition a portfolio. Whatever your needs are, I will do my best to help you. I love doing these sessions. I limit myself to 4 a week. They sell out very quickly, so I apologize for that. I know many of you keep sending me emails. I always miss the consultation. Well, I can't do more than 4 a week because I need the time also to create more content. So just look at the little message on the homepage there, right on top of the calendar, to get a status if the calendar is open or not. But I will let you guys know via YouTube community post and a Facebook post when the new appointments are open. Speaking of Facebook, make sure you join our Facebook group, which is almost at 10. We're almost at 10,000 members now and going up every day. So it's a nice little group where people post their questions, they put their portfolio, and we all try to help each other out when it comes to passive income investing. So make sure you join us there. We're also on Instagram. If ever you want to know a little bit more about our personal day-to-day life, you could follow us on Instagram if you use that social media platform. Don't forget, guys, the mission of this channel, my mission, will always be the same. It's to help everyday, normal, regular working people to invest on their own in order to build their own stream of passive income to enhance your quality of life and when they become financially independent. So how do I always leave you? Make sure to continue staying safe, stay healthy, and of course, stay passive. See you next time.